Hey everyone, good afternoon. I haven't streamed in a bit, so you guys have to give me a second here. I'm just sending in Discord too. Okay, we'll make sure everyone's kind of tuned in and then we can get started. I did cover quite a bit in Discord today anyway, so most of it's going to just be a recap just to kind of see where they take us back to before the close. But this is essentially the area that we figured this could get to, especially if it starts to fail. Right around that 64.58 to 64.66 range. Okay, so for starters, last night, overnight, we had some pretty important conditions that had to be preset for this to kind of avoid major volatility. And I did post them to Twitter. So they had a good break after the bell with the news, and then it kind of came back down. It sustained the channel. You can kind of see how it stayed above 65.32, sorry, and 65.48. It kind of just nested right in between here. I didn't really care too much for yesterday's pin. I've already said it multiple times in the past few weeks, like pinning in the channel doesn't really do anything for us, like staying pinned in this area here. At that point, we're better off pinning down here or at least trying, excuse me, to pin around these areas here. So there's been a lot of stalls this past week too, specifically around that 65.92, 65.96, and that's calculated off like the past week's highs. Earlier in the week, we failed our 66.20. 66.22 was, I don't have a lot of the spots marked, but 66.22 was our overhead. So no real structural breaks above core areas, but enough to at least give it odds of coming back to return back to these core ranges. I think the biggest downfall this past week was when they stalled our 6681, 78 upper overheads like wall that we had. This was probably the bigger area this week that we were watching on the report. Any breaks above there is what could have taken us to 67.20s and so on, but those stalls made it pretty evident that they were stalling and not going to return back to that range. Overnight last night, I did set the conditions and I posted them to Twitter that they really have to try testing back over 6571. Okay, so technically speaking, 65.68 is still kind of like a lower core range, but I do think that getting closer to the 7.1 area would have probably offset a bit more of that risk. So this was probably the first major stall that we had last night, is this area here. Okay, so stalling this range in here, I would consider this a little bit bearish in terms of a core stall, and mainly because they already had triggered these areas like previously. Had they not done that, then maybe it wouldn't have been as bad. And then they brought it back down. Even yesterday, 65.15, 18.20 was our real-time support. They did a pretty good job holding that yesterday, if you guys recall. Let me just go back to yesterday. So yesterday, I mentioned that this was our max downside yesterday. 65.14, 18 to 22 area. I think they did a pretty good job holding that the last like 2 minutes into the close, okay? Do you see that here? So real time, I think they did good holding that and getting back here, but stalling at 65.97, 98, that wasn't really progressive. Like they would have needed to break at least back over 6622, okay? So this did contribute a little bit to how things traded, but I think a lot of it had to do with them closing in the channel too, and specifically the failure last night of 6571 back in here. That clearly brings it back to retest like the 65.22, 14 range. You can see that they tried their best back in here. Do you guys see this? Like if you mark those areas that I set, around 6514, 1822. Do you see how they tried to kind of sustain there and then bring it back to the top of the zone? This was a secondary failure here when they couldn't get it above 6532. Okay, so I did mark that, and if you notice, I don't have all the levels marked, but do you see that? These are kind of some stalls around the 65, 32 to 29 area. So that was a second failure, which implied that, okay, if they're going to fail those ranges there, then they clearly take it down to our next levels. And I do have the downside cycle that I sent anyway, but and I did say it stays the same. None of this really changes. Like, this all is pretty straightforward. So your next major range is going to be back around that 65, 71 to 78, which ended up being our weekly support this past week. I knew that failing 7871 though is probably going to put it probably at a bigger risk of volatility back to like 6538, 6520, 6510, and that's exactly what they did once they kind of came back beneath that. Hence, like 6478, 6485. These were our weekly support ranges anyway, okay? So triggering 6478 a second time, that's going to do nothing but what? Like, had they not tested that initially earlier this week, then I would say, okay, yeah, then you probably have some pretty good odds of seeing some sort of sustainment or structure there. But the fact that they didn't implied what? Can you guys see the center screen? So 6478. Okay. This was our really big structural support for us this past week that I put out on Sunday. And that played out to be extremely precise. Okay, what happens if you fail these spots though? And specifically around like the 7-1, 7-8, 6-6. What happens if you fail those ranges? This is what I said first thing this morning, specifically around the 6668. Okay. And it made sense because that is a really huge area for price to try reacting there. If they don't react around there, then that's what's going to push us back to this range in here. And I figured that they could keep it stuck around 64.51, 64.58, 64.78, 64.88 for a while. And the idea for today, and I'll just copy paste the major areas that we looked at. And I did mention we did 2 shorts, 3 longs on the session today. And it was mainly based off whether or not they can come back, hold, sustain. So you can see the very clear failure, okay, of our 65.10 back here, 6.488 down here, okay, and then this is when it started hitting our 256 point interval. And they opened around there too this morning, okay, at 6.49475. So 256 points beneath this week's highs is roughly around 64.92, 64.93. And you can kind of see they did hold 6478 pre-market. So there was no break of those 2 major support ranges in the 7-1 and 6-8. Okay. And when we were monitoring this morning, and I'm going to go back and show you guys this. So this is a massive area. And I'm sorry, there's a lot of repetitive information here, but maybe some people didn't read the Discord or are not in the Discord, but 64.68 is basically the 346 point interval range. Okay, so failing to sustain that's what's going to put us at a pretty big risk in terms of continued downside. It's not just about today's downside. That's a major area for continued downside. Okay, that's kind of like linking it back to 67.24, 67.34. Off a 346 point range, it takes us back to 68.14. Okay, why is 68.14 important? Why is that area important? And these were like really major flip dates too, by the way, from these past days. So why would that range be important, you think? And specifically from the prior week. Do you guys see it? Let me remove the volume bars. Okay, these were the 346 point intervals. And I've mentioned it several times before. Usually, when you fail those kinds of ranges, you tend to get back to 410, 420 points. That's when the market starts essentially expanding. Okay, so usually these are like expansion ratios, and we've talked about it quite a bit. When I went back and looked at it from like an exact metric this morning, it was closer to 432 points. And I'll go back and show you guys what I mean. I'm just going to copy paste because I don't really feel like typing all of this out again. But okay. Right back here. So in the past, we were working with 1384 for annual ranges. And when they really started to expand, that's when they started hitting closer to like 420, 432. This is definitely a period where they could start expanding it because now structure's there. So previously they weren't expanding when we were stuck between 210, 220, 280, 320 point ratios. They were keeping it about 66 to 34 points below. Now they're expanding above, okay? And this is where things can start getting quite volatile and pretty fast. Hi, Booth. So, that being said, when I'm looking at this from like last week's opening range, last week's high range, I just wanted to see if they're holding the line here. So we're getting obviously to a very, very, very crucial point. So from highs, they've already broken 6468. Okay, from, where is it here? From last week's close, they're still holding pretty close within like those mid ranges. So in that sense of things, it's okay. From the opening closing ranges on the 17th was one of our most important flip dates. So if we look at our 356 to 346 point intervals, do you see how this area that it's currently trading in between right now is very crucial? And that's partially why I've included it in these ranges here. That's the 356 to 346 point range between 64.18 basically and 64.28. Okay, this is off of the 17th closing range, which the 17th is linked all the way through until month end, and we'll talk about that in a second. We talked about it on Monday and on Sunday. From Friday's, where is it here? Friday's closing date all the way through, like they're still working with quite a bit of range here, because the 173 point metric from Friday's close, so just 173 points is half of 346. Do you see why, you guys? This area here that I mentioned earlier in Discord is huge, specifically around the 64, 18, 14, mainly if they start failing around 6422, 6418, okay? This is from Friday's close, okay? This week's open, we obviously had a pretty big gap down, so this is going to be like the same thing as kind of breaking back beneath there. But when we look at it from mainly a high range, this is where risk really starts to increase. Okay, it was mainly based off this. So this is what I'm saying. Once they get like the 410 point metrics, these are the extensions. Do you see what I'm saying? Like closer to like 410 points, 420, okay, 432 off last week's highs is going to take us down to that 63, 80, 63, 88, this kind of range in here. So we would already know that once we start triggering these types of numbers, that's going to be a pretty big risk for us specifically, and mainly because that's what can start pushing double the range. I haven't fully measured back from all-time highs yet, but I did measure this. Like the 512 point range off the stalled highs. And when we went back to our all-time high ratios, usually market works in like 692 points, so that's kind of what gets us closer to like these areas down here, like 6349. And I think did I paste those in here? I think I did. Sorry, I know it's kind of messy in here, but so it's pretty clear that there's a lot of support back in these ranges here. The most important thing that stood out to me the past like few weeks though is I've been working with a 7-day bear flag, okay, and the 10-day. 7-day we had very important dates for this started as early as the 24th, but it flipped on the 5th. So the conditions were that we really had to try retracing back by the 4th, okay? Did we retrace back on the 4th of March to try avoiding basically this massive downside pattern from forming? Okay, and then the 16th was the duration of the short continuation all the way through until the 25th, till potentially the 3rd. So if we go back and look at this on the 4th, they tried. I don't think it retraced quite enough though. So when we went back and looked at this in the past, we wanted closer to like 6922, 6928, 6932. Okay, so it's pretty evident that they didn't get quite enough range there. And then the failure on the 5th. So I think the failure on the 5th, especially when they brought it back beneath the 68, 32, 22, 24 range, kind of set the tone. You can see how they tried pushing range back on the 16th, but from a structure perspective, is this a little bit too late on the 16th? What do you guys think? To negate that structure from having a downside continuation till the 25th. Yes, right? Because this should have happened ahead of the flip because this candle closed on the 13th, not the 16th. Okay? The only reason why, okay, we said there could be a window for the 17th and 18th is mainly because we had a 10-day structure that could override it, okay? So our 10-day structure came back, and this one had similar flips. This one was on the 3rd and the 17th, okay? And this runs until the 31st and the 14th. This is the one that could put us at massive risk, and we've talked about this for the last few weeks now, but that bought us an extra day of time, okay? So it kind of opened up that window again. What did we end up doing on that day? Did we end up clearing and coming back over the 5th and 4th closing opening ranges? Which are super calculated, by the way, around like 68, 22, 24, 28, and these areas in here. What did they end up doing? Maybe we'll mark these in yellow. They stalled, okay? Do you consider this a failure or progressive based on what they did back here? Do you think that this is progressive price action on the 17th? They were already late doing this on the 16th. This was kind of like giving it another chance to do this on the 17th to kind of cross over the two structures. What do you guys think? Does this look like a failure to you, or that looks like a pretty clear failure, right? So, and if you're using the 100-point base theory, that's the same thing as stalling the neutral zone. They came back, tried pushing again. You can kind of see that 68.14 stall right there on the 18th, and then it just kind of continued. We did do some mid-range calculations between the 25th and so on, like between these days here, and it ended up landing on the 24th and 23rd. What I mean by that is, so kind of like the mid-range between here and here for like month end, so 10 bars, so 5, like around here. So there were some odds that they could try their best to retrace it. And if we look at it from the 16th to here, okay, 11 bars, so similar, like around like 5.5. Okay, so you see how this was the period here. This is the mid-time calculation, so it's not a price calculation, it's a time interval. Okay, this is the 50% of the time range for this, for ES basically to get its shit back together. Okay, so this is kind of like its last straw to try to negate the downside like it did on the 16th and 17th. These retracement dates are linked directly to the 16th and 17th. Does that make sense? Before the continuation to the downside period, okay? Does this look like a successful retracement back here? And I had mentioned that like our minimum spots this past week were getting back over 6678, 6681, 84. Okay, these areas here, these were my bull areas, and then with an attempt to maybe try getting back in the zone, okay, and then a potential push to get us back to retest 6722, 6732, 6738, 39, 75 I think was the calculated spot, but I'm just doing this for you guys to just get an idea. Not, it doesn't have to be exact. 6758 I think it was, and then our 67, I think it was 6766 that was calculated from last week, but you get the idea. Okay, this clearly doesn't look right like progressive. 6778, 6781 are our calculated ranges off all-time highs. Just as a very, very quick like refresher, you guys should know that by now, but I feel like sometimes people forget. Okay, these areas down here are the 256 point ratios, okay? So in other words, I hate that kind of gets stuck there. This retracing back here basically gives us odds of them bringing it back, okay? So, and it's pretty clear that they tried doing that on the 17th and then kind of stalled. Okay, when we're looking at this from like an open close ratio, this is why I was thinking, okay, well, maybe if they get us back at least over 6720s, then it could be enough to kind of help negate some of this risk. But it's pretty evident that they couldn't do that, okay, based on what they did on the 23rd and 24th. Does everyone agree with that? And if we use the actual structures that took place, so like the lows from the 3rd, okay, or even like the closing points or low points from the 4th and 5th, you can see the evident failures here. Do you see that? I know it's going to be a little bit hard to see, but... And then similar to this being linked to these days in here, okay? So since that was kind of like the mid-range, if we kind of do a zoom in right here, you can see how it failed these ranges in here, okay? So, and that was pretty clear that they failed that. And we already knew that if you fail 66, 70s, 80s, you're going back to your next core range, which is going to be back to 60 to retest 6520s. You fail 6520s, you're going to retest 6470s, 6480s. You fail that, you're heading back to this major area right here, which is exactly what we're doing. But this is the area that can keep that risk pretty high, okay? So, and now they've started forming multiple patterns, and this usually happens when, like on the 3-day, for instance, when this starts happening, it's because there was multiple attempts to try saving the things, and they couldn't do it. So the most common flips coming up are the 31st, okay, and the 3rd, and the 13th and 14th. So just note those days. 4-day we used a lot in the past, so I've just been using it just kind of as like a median point right now. But for the most part, it's mainly off the 7-day to 10-day ranges. So we did use an 8.5 day, which you can't physically see, but you can manually calculate, and you can kind of see that this reformed a flag. So you can, even just looking at it like this from the 16th to the 25th, it's pretty clear that it tried its best to try negating this and then failed, okay? So, and now it's kind of in a continued durational bear flag kind of formation. This here flips on this on the 6th and runs till the 16th. It's mainly this 10-day. So normally when we see patterns like this, how many bars do they continue through until they start seeing some sort of relief? And it is important that you start tracking these, because this is also what our annual cycle's in for. Yeah, so sometimes they can start as early as the 3rd bar, especially if it's not like pre-formed in here. So like you see how like this bar right here from highs is not linked to this starting point here. That could also mean that there's another pattern that maybe we're just not seeing, you know, like off like an 11.5 day or something like that. But for the most part, it's usually around that 3 to 4 point mark. I didn't find any that were directly linked myself. You could also just maybe measure ones that started from the highs and then are maybe going to flip around the lows. I've used the 35, 36 day, 32 day for the last few years. So these ones could be coming back into play here again for like April 10th and 16th. Do you see that? Like around these ranges, but none of these include the highs. So you probably have to extend that a little bit. We did use the 45 day a lot in the past too, but my guess is a lot of these are going to be closer to like the two-month range. And that makes sense, because if they continue this, we did say that it could last all the way through till potentially mid-May into end of Q2. Okay, so I like the simplest way of thinking about that is extending it to like a 3-month or like a 3.5 month, because it's kind of like the entire quarter of Q1 and potentially half of Q2. Okay, so if you're thinking of it from like a monthly range, it's probably going to be closer to these ranges here. And this is why this is so important, because this is a massive bear structure. Okay, so we really have to start monitoring the ranges that we trigger specifically before these periods come into play. And that's why if they start breaking down these ranges as early as now, and we just talked about that 6.37178 area, what area is that we just looked at? Do you guys remember? What's this area down here? I'm just reading what people are putting in the Discord. Oh, I mentioned it earlier, but anyway, I'm just gonna repeat it again. So when they start extending those ranges above 346 points, that's when they can start breaking down pretty quickly. Okay, so if we start looking at it from like an extended ratio, like 6349, 6471, 78. Remember how we just looked at that? So if we did something similar to that, whether it's off highs, like 692 points is going to be close to like here. Do you see that, Booth? Which would technically take out this structure on the lows from back in September and August. Or in other words, engulf that. Okay, that's one way of looking at it. If we're looking at it from like the actual days that we started to stall and form these formations, so like let's say from the 24th, the 23rd of February, because that's when these bars started to form. Okay, so kind of like back in here, back in like these ranges in here, okay, from March 5th. I know it's gonna get kind of messy to see now, but let's say from like March 5th. I didn't fully measure these ranges in here, but this is why they had some odds of trying to hold this 6470s this past week. Do you see that? Kind of like around here. But the more and more they kept stalling and also breaking a bit lower, specifically off the 4th and 5th, because this was such an important time to try retracting or retracing. Okay, once you start hitting closer to like the 512, it's pretty insane because that aligns right with our zone area of 6388. Do you see it? I want to make sure you guys see it so that you guys understand the kind of ranges we're working with, okay? But that's why it's pretty funny that those structures off the 2 or 3.5 to 4 month are also based around these areas here too. Whereas if like they fully extend this, yeah, exactly. Like this is where obviously risk starts getting a lot worse or like steepening. And specifically off like March 17th or 18th. Okay, these are like the 410, 420. There's two ways of looking at it, whether you're looking at it from the 17th, 18th, or the 4th and 5th. They still align with annual ranges. Okay? Once you start hitting close to like that 432, do you see how that's also aligned close to 6,376? It's pretty much around the 70s, around 71, 76, 88. There's a lot of importance around those ranges, specifically if they fail, because that's what can expand the downside on the year. Usually when you start hitting ratios like that, that's when things can start to accelerate. And essentially it's basically like the market testing the full range. Full range is around 1,384 points, which is quite a lot. So right now from highs, we're hitting around 630 points. Okay, so we're about 66 points shy from hitting 692, which this is where markets could, that's where they could start to accelerate and expand. So this area in here in general, between here, okay, is huge, because that's what can drive the market down another 600 to 700 points, which would obviously be very steep, right? Like if they did something like that. And that's what takes us back to basically this range in here, and so on and so forth. And there's the structure to support it, because usually when you have a 3-bar down structure like this, you have 1, 2, 3. If you have a 3rd bar continuation, let's say, okay, and your 3rd to 4th bars are usually the most violent, okay, and then your 4th bar period is typically the period that can either exhaust or expand, okay, so a lot of it's probably going to be relative to these ranges in here. Does that make sense, you guys? Because normally if you don't expand or exhaust or whatever off that 4th ratio, you can trigger another 3 bars. Triggering another 3 bars, let's say if they, I'm just doing a mock for you guys to see this so that you have an idea of how this could play out if they don't end up sustaining or retracing in time. Kind of like what happened on the 4th, 5th, 23rd, 24th, 17th, 18th. If they did something like that, let's say, or even had an expanded 4th bar, that would be dangerous. Usually they'll try to exhaust. If they did do something like that, then that's where you could see, you know, like the continued reversal down. So 1, 2, and these bars, I'm not drawing them specific to price. I'm just showing you 3, okay? And that's what could allow for this to kind of run through all the way till end of Q2. Does that make sense? From like a massive 3-bar down scenario. We haven't had many of these on wider structures like this. On a 10-day is pretty scary, because we've had both legs on the 10-day that had continuation, like right here. This is a really good example. We had one back here that I used last year or the year before. 1, 2, 3, 4. You can see 5, 6, 7, 8. You can see the slight exhaustion here. 9, 10, 11. Usually you can just count 3, 4 bars every time, and you can kind of see once they hit that 11, 12 bar, then it started to exhaust a bit. We had them on the 4-day. The 4-day had started a cycle in November and then negated. So this is why I'm saying, Boots, sometimes they can negate on the 3rd bar. And in that case scenario, it was because, remember the 17th and 21st, it did it too early. Like it didn't take out the lows in time. Do you remember that? And I said that this isn't a valid 3-bar because this low wasn't taken out before the 11th and 17th. Do you remember that? I have several streams about this before this ever played out, and the whole reversal back on the 20th and 21st. We called that to literally the exact date, time, everything on this being a fake out, and that they could bring this down if it's after the 17th and before the 21st. I don't care, because they'll probably end up retracing it back, and that's exactly what they ended up doing. They brought it down after the 17th, brought it back after the 21st through the 28th. So that basically negated that bear flag. Okay? I know some of you that are new here probably don't get what I'm saying, but this was a very, very important time for us. Basically, I told everyone on the 14th and 13th that even if they take out the lows, it doesn't matter because they're going to negate this by the 21st. And they could basically take this back out. This time around, though, we don't have the same... we don't have that same sort of like structure, okay? Because this time around, like back in here, this was invalidated. This wasn't valid. And that's why I said earlier, I'm still using the 4-day for timing because it's still linked to very past important price points. So the 21st, the 11th, okay? Back to like these points in here on past all-time highs. Okay? So I still think that these dates are still important to use, and they do align with our timing aspects on the 25th and the 31st. So, and there's kind of like a mid-range between the 6th, 10th, and 16th. So, whereas in this case scenario, this is for sure valid, right? Like this took out its bar. Do you see what I'm saying? This is a valid bar that can continue. This is valid continuation. This easily could be valid continuation. Same with the 7. This was valid. Do you see what I'm saying? This could have been invalidated if they closed above this bar here. So like if this somehow on whether it was this bar here, this bar would have had to retrace at least probably back up to here to invalidate that. Does that make sense, you guys? Which would have been back over 67.20s. This is from a structural perspective I'm showing you. This is how this could have invalidated last week for the 16th, 17th, okay? So if they had brought this back and closed above, or even like ahead of the 25th, let's say on the 24th, that could have helped invalidate that, because it would have brought it back above that initial bar, okay, or that formation of that bar. Another way of looking at that too would have been, it's coming back 256 points above, 257 points above. Do you see what I'm saying? From like the mid bar. Another way you could look at it is, okay, if this retraces back 50% of that bar. There's so many ways that you can look at this, and it all ends up leading to the exact same thing, okay, around 67, 26, 38, 40, whatever. But in theory, it's just so that it brings it back to this bar range here, okay? So that could have negated if they had done that last week, or even this week on the 24th or 25th. Just so that you guys have an idea of 3 different ways you can look at it, from a time-based perspective, from a structure-based perspective, from a retracement-based perspective, and from a point-based perspective, and from a zone theory perspective. They all align that this had to get back over like the 67, 20s and 30s area for that to essentially basically negate this from continuing. So same sort of idea here now too. This is still valid, okay? Unless it were to come back now over same sort of points, right? It has to come back over this sort of range in here to invalidate this. So although the 10-day is still a valid 3-bar and so is the 7-day, them overlapping each other, and by overlapping I mean this period between the 16th and the 24th, okay, would make it a very tough period probably between the 3rd and the 14th. And that makes sense to me because the 10-day has that 3-bar continuation all the way through the 14th, right? 31st through the 14th. And this flips on the 31st. So it kind of gives you that tiny window between the 31st and the 3rd. Okay, so from a risk perspective, what do you think would have to happen here? Specifically, probably on the 30th, since that's the day ahead of the flip. Okay, this would be similar to like what didn't happen on the 15th or 13th, or what didn't happen on the 24th ahead of the 25th. Okay, so this is going to be linked to the 24th, these stalls here, and the 23rd, and it's going to be linked to these stalls back in here. What do you think would have to happen in this scenario to avoid major continued downside risk, I guess you could say, since there's a crossover? I would start setting some conditions as early as now. Yeah, they probably would have to engulf, and that would make sense. I would say, like, at a very minimum basis, they probably have to bring it back over 64, 68, 64, 71, 64, 78. Does that make sense? Which, we already knew those areas were support before this week even started, and those ended up being the earlier week ranges that we were looking at anyhow, like before that kind of came back, right? Same with 6484 or 64 or 6585, sorry, 88, 2223. Okay, it kind of would have to come back and retrace very similar type ranges for that to be reset. We already started the week off at a disadvantage, opening at 6510 and not fully getting that retracement back above the 6748 to 6768, 71, like these areas up here. This would have really helped to negate that. So even though they're opening around neutral ranges, they're still trying to open and close around some core areas here, and they've been stalling around some core ranges too. So lots of neutral stalls, but like bullish closing opening price points, and today was a good example of that too. So there's going to be some pressure on the 30th to 31st, and I would say for sure in between here for month end and month open, because the 3rd is the flip, which would put some pressure on the 2nd. Okay, and the reason I say that is because it's the same thing. If you continue here on the 7-day, If this is already valid, okay? So technically speaking, does this have to go any lower before the third to be a valid continued bar? What do you guys think? You guys have to get better at structure. Does this have to go any lower to be valid before the third? Or validated, I guess, before the third. No, it doesn't, right? The only way it would become invalidated, okay, is if it retracts back ahead of the third. Does that make sense? So could we see a bit of a battle here over the next few days? Especially since the 10-day flips on the 31st and runs till the 14th. And that's already on its second bar, so the third bar flips here on the 31st. There's going to be a crossover of the third bar. And technically 1, 2, 3, 4, okay, bars, because this already had formed and then continued. So this is kind of hitting into like an early negation period if they decide to negate this 3-bar down almost immediately, okay? Which they've done that in the past off multiple time frames, where like they've come back and negated. Like this 10 day is a good example. That 4-day that we looked at before was a good example. Like you see this here, like how this came back and negated that. So it's kind of hitting a bit of a crossover period. So the days that we could manually measure, I would say, are probably, I would manually measure the days between the 14th and the 3rd, and between the 14th and the 31st, okay? So mark down April 7th. That's going to be a calculated flip. Can someone write it in Discord so I don't have to redo this too? And then I would also maybe mark the median points between the 3rd and the 14th. So like 3.5 bar range around the 8th. So basically the period between the 7th, 8th, and 9th are some mid flips. If they continue, this could be the period that they start to do an early exhaustion. Does that make sense? If they don't do it as early as like the 30th, 31st, there's quite some pressure because that already flips over on the 31st. And then there's not very much time between the 31st and the 3rd, right, for this to come and fully negate. But it's basically to, like the period in between the 3rd and the 14th that could try preventing this, okay, from seeing a full continued downside continuation all the way through till the 14th. Does that make sense? Because this flips on the 31st. And if they don't start to see any exhaustion until the 14th, are we in trouble, you guys? Yes, right? Especially if they're gonna be on like this kind of realm of range, right? Of like 410, 420 point ratios. That's where you really can move fast. So, and obviously we're in a market dynamic right now where catalysts can easily push price, right? So if they start doing a bit of a, let's say, exhaustion as early as like this period in between here, that can make it so that they don't have to, and this isn't even like this period falls into the week after, right? Like, because this would be like into month end, and then like that would be the first week of next month. But this period here could be very vital, I think, for mitigating like wider term risks, because then otherwise that's when we start risking 7 bars, 11 bars down, and over a 10-day period is pretty steep. So, and I don't like scaring people, because I just don't like being that person. But like essentially you can also look at it from like, okay, from like our March 31st ranges, like if we're looking back down here, okay, and if we're working with roughly those 1773 to like, like 1800 intervals, or 1790, 92, 93. That's why you really need to get back over like the 6622. That's another way of looking at it. Does that make sense? And that's why, like, I really didn't like how they started to fail these ranges here, basically yesterday morning. I was like, oh, that's not good, because it's like on a wider scale, it is pretty dangerous. And like our April dates, don't forget these ranges in here are like, it's always good to go back, you guys, and remember which dates are linked with what. Okay, so the 6-day is linked with April 7th and 8th. Okay, this is linked with the 23rd, the 31st, and the 8th. Okay, and the 16th. I know we haven't talked about the 16th much, but it is important to kind of note that. It's also linked with January 29th, which is important because that was the day ahead of the all-time highs. So your flips are very crucial here. Your pre-flip, okay? So you hit lows on the 7th, you hit highs on the 28th. That's the final candle ahead of those candles closing and opening, okay? So the 6-day is linked to these lows and these highs. It's been a very important time frame to kind of watch and monitor as we go, and especially with like the negation period that they had here. It wasn't quite linked with like the 21st, but I did like the fact that it was still aligned with the 28th, because the 28th was kind of like the mid flip that we had there, and it's still aligned with the 5th and 25th. Like there's still some of the midpoints here, the 13th. It kind of just gives you like the leeway of like the mid cycles, but I think it's important that like memory recognition too, because sometimes people forget the 8th of April being like the mid flip, or the calculated mid flip, is pretty interesting to me. Like us doing that, like, how we just did the 10-day period between the 14th and 31st, and between the 14th and the 3rd, and those landed on April 7th, 8th, 9th. That's pretty cool, because those are the exact 1 year dates from those lows. Okay? Does market remember past price on specific dates? Just like how we kind of like remember anniversaries and such. Yes, right? So like there's some sort of like recognition with that. So and this was the 692 point retracement, just so I'm refreshing your memories. I'm only doing this once because I feel like I've talked about this so many times that I'm even bored of it. Okay, so this right here, when they retracted back that range, okay, that's kind of what helped us get that full push back right here to break these structures. Okay, come back and break highs. Do you see that? Then they held on August 1st and 4th right here. And these were part of our annual ranges, just in case you guys forgot. Annual ranges are roughly like 1384, but this is unadjusted, so the pricing is going to be a bit different. You can put it to adjusted if you want. But that kind of just gives you an idea of the kind of risk, or like the area of risk, I guess, that we would face if they really started to kind of push down this range. And you can even see it, like this is pretty insane, because if you measure this back off this price point here, okay, to that March 3rd candle, okay, do you see this? March 3rd is linked to April 8th and 7th, which is linked to next week. That's also 692. Isn't that insane? So I'm not saying they're going to drop this all the way to 6,222 by the 31st, but I wouldn't be surprised if they did. Like if they did it that quickly, they'd probably have to not have any sort of retracement. It would probably just be a straight continuation down. And that could be the area that they try to revive this, because if they break beneath 6,222, in theory, that's linked back to to 4,800, which is pretty insane, because that would kind of take out 2022 close open. That puts us right back to like where we started. And we're in a 6-year cycle reset right now for early 2026 that I've been talking about for the last 2 years, considering we're on that fourth bar. So this is the period of expansion slash exhaustion for the market. And we've been aware of that for a while now. So I was prepared for the beginning of the year to be like tougher, but I didn't know that they were going to have a full-blown war. Like I knew that there was going to be something that happens to reset the 3 to 6 year market cycle, but that the fact that this is what's happening is pretty crazy when you think about it. And that's how I know that structure, price, and time all precede catalyst. It's yeah, exactly. So maybe we should look at like these ranges here. So because maybe this is where they could start seeing a nest. That's why I think like there's a bit of a buffer between 6,349 to 6,222.39. That's where I'd really start to get a little bit more concerned, I guess, if they broke that sort of range. I didn't fully look at it from the 256 point ratios, but it's pretty clear that they're breaking back beneath there. I think the 256 point ratios though also make sense too, because they struggled hard to get back over 65 32 last night too. Yeah, isn't it, with the current price action? I just want to see what some of these would land back at. Because this is where we had that contract rollover when they gapped it. Like if you guys remember on like the 16th, between, I think it was like between the 16th or 18th, somewhere around here. What's the overall range? Two. This is actually an interesting way of looking at it too, because if you put that in half by two, like 553 or 671 are like the median. So that those could easily, remember how we've been working with like a median type of range? I guess on a wider scale, these are like median types of ranges. And those are probably just the same thing as like the 512, so 256 by 2, and the 346 by 2, so 692, 512 by 2. It's kind of close to like 600, roughly like 600 points, like 602 points or something like that. And 602 by 2 is 1204. Just gonna reset it so that we can track into the close, because I really wanted to see if they would actually trigger this area in here into the close, or if they would try their best to sustain and try retracting. So okay, from a very base theory, I feel like if they can get this at least back over 6,432, because that was the short target failure if they don't accelerate. And there's like the neutral area if they start to engage, okay? If they fail to hold. So I didn't really think that they would go any lower than this range in here. So there's not very much risk beneath. And if you notice here, like, remember how I said they started the week neutral so they could hold the week neutral? The neutral zone is between 63.98 to 64.14, okay? Down here. This area here. Okay. So I feel like they have a decent chance of holding neutral, in my opinion. Based on where they open the week, where they open the session. But this would apply some pressure to try getting back over 64.22. And ideally back into kind of this range in here, like between 3.2, 3.8, 4.4. I'm not sure if they can bring it back. I did mention earlier, like if they can get this somehow back to 6.4, where was it? 6.458 to 6.6. That would really help. And 6.8, 6.6, this area here. That would really reduce the risk, but that was only in the event that they were actually successful in sustaining around 3.2 to 2.2. So I think that that range was reduced. And probably at least by like 17 to 22 points. I'm just going to measure off the actual high and low just to kind of see. Yeah, do you see that? So had they held closer to this range in here, they did have some odds of bringing back to 64.58. So I feel like 64.58 is probably off the table now, and especially since they're having issues kind of holding around the 6.410 to 13 range. On a downside continuation, this is where I think that they could maybe engage like with the max areas that we included for today, and I would imagine that they're probably right around the 6.38988. So what do you guys think? Do you think that they're going to push lower down to the bottom of the zone, or do you think that they're going to try to keep this somewhat in this neutral spot here? Let's do a poll. I think I deserve a pat on the back for nailing the exact ratios, at least for today, based on where they hold, where they stall. What we did earlier today was we did a long off the hold of 6.8, okay? We covered on the stall here of 9.2 and then did a short again with odds this time of hitting 5.8. They went a bit lower than 5.8. We had odds at 5.1. Okay, this was my support this morning, was between 5.1 to 5.8 if they stall 6.8. I took another long off the 5.1 area. This is kind of the choppier long, and I said that if they don't clear 9.2 again, then I would take another short here. So this is where we entered our second short. And then I did a long hedge against the short, okay? Because the idea was if they can bring this back over 6.871, then they could negate this. If they don't, then they're likely going to keep this like a continuation. You can see the pretty clear stall of 6.8 right here, okay? Down to 3.2, 3.3, that was like the second target, and then directly down to like the 68.20, 22.18. And this here I think is what prevented this from getting back to 5.8. So this is kind of, right now, the way that you can think about this is it's kind of stuck in between, because I think that there's still about 22, if we look at it from like a max range perspective, to 44 points in range on each side of the trade. Does that make sense? 5.8 is probably the bigger area on the upside. This range down here on the downside. And it's kind of relative to whether you're measuring off the stalled highs or not. And then there's a lot of support around 63.89, 63.91, and that would be if they try holding the zone. If they want to keep this neutralized in between here, then they likely have to retract at least 13 points in range, which would be breaking back over 642224. Okay. 17-point break would get you back over like that 2829. They'll open up lower. Oh, for like next week, you mean? Okay, let's do a pull. Lows are in 63.98 to 64.05. 64.88 to 64. Oh, not 64, sorry. 63.88 to 60. I don't know if I should include this in there. I feel like this would be like an accelerated short. Technically, if they brought this like all the way back down to like 63.49, I don't see them doing that today though. Like, I don't think that they would give up that much range before the 31st. You know what I mean? Like, if they're going to do that, I think they would at least wait till the 30th. Can you guys vote on that, please? So we went over why all those areas are pretty important. Yeah, AA actually seems probably the most likely because, well, one, that was the max I put out this morning, so I'd rather just be right, but also because of the fact that this reduction right here, this to me makes sense. Do you know what I mean? That, like, if they did something like that, that they could potentially just extend it down to like 8975. But you guys vote for what you think. Whereas like taking it down to 63.71 and potentially 49, this immediately puts us at like a mass risk of like getting back to those 62.20s that we talked about earlier. How do we... But this is really clean price action today, especially from like our stalled spots. So like the long, the short. I was a bit later on the short. It was kind of closer to this area in here. To the re-long or like hedge long. To this short. This was the first long I did. I did do a long here though, with leaving the short. And the idea was that I would add to the short if they stall here, and then leave one side to basically go to zero, because I knew that if they fail either end, whether it was 6451 or 6492, either end is going to break. So, and I'll show you guys what I mean in a second, because this is what we talked about earlier. So we mentioned that they have to basically, they're not going to just keep it there. There's no way. Okay, so one side of the trade has to break. They can't leave one end open. Does that make sense? Because, and I mentioned earlier, like one is going to end up flat or to zero, which I don't care, because one end of the trade is going to end up basically moving, because either end is going to have to break. So if we broke on the upside, okay, the range has to be equal. Does that make sense, you guys? Like, this is what I was trying to get at. And I said that we'll extend the short if we break beneath like roughly around 64.51 to 64.44. So them clearing above 9.2, I would imagine, is probably going to be a very similar range. So if we measure even something like off here, let's say, how many points is that? That's 77 points. Are you guys okay if I clear this? Just to make it easier to see. Okay. If they did something in the inverse here, let's say, so like let's say that they actually cleared this upside range in here, we likely could have seen similar type PA, and you can measure it whether it's right off the 5.1, okay, or the 5.8 spot, just to kind of give you an idea of like what could have been like the mid or max range scenarios. Basically, if you want to do it off of today's opening range too, that works, since we opened around 64.90, 4.92. I'm just going to use 88 point ratios because this is what I would normally use anyway. And I think off today's open, we've already hit or we are hitting 88 points. Hey, we're hitting super close to 88 points, guys, off today's open around the 64.07 spot. So we want to see essentially where could they have taken this on the upside. Okay, so had they sustained here, what kind of range could this have brought us back to? Okay, because I think it is pretty important that we try, you know, seeing what kind of price action or what kind of range. And I would imagine that it would have been likely the retest of the stalled areas that we had back in here. Okay, around 6.5, 7.5, 7.8, 8.1, 8.2. Do you see what I'm saying, you guys? Like the range is likely to be equal. If we do it off like the full potential max range scenario, so like let's go with like 107 point ratios, since those are some core ratios and it makes sense because it's right off of 6388. These types of ratios here would have given us odds to basically come back to this range in here. Okay. Whereas if they fully pushed range to that 6371 that we're talking about, that I just put in my report or my poll, this kind of max range scenario is the same thing as taking it back to 6620 retest. Does that make sense? And this is where they stalled. And this is where the price action kind of took a big turn. Okay? So do you see how either end accelerates? You guys have to be able to see both ends of the trade. Okay? So 6592 or 6492 could have accelerated to 6622. You could start with 6571, 6588, 6604, 6622. Does that make sense? Even a minimum break, like let's say if they realistically sustain these areas here, you could think of it as like a retest of like 6520. It's kind of relative to like how much time you obviously have left too. So, but it's good to always see both ends of the trade to understand your basically your risk to reward. So did I see reward today if either end broke? Yes, obviously. Otherwise, I would have never done a long and a short mid-afternoon after I figured I'm like, okay, you know what? One end of these is going to be in the money. So I don't care if one end goes to zero. For one end to go to zero, the other end has to be profitable, correct? Like it has to offset the trade that's going to zero. So I know that there's going to be a pretty decent sized reward on either end. Usually if I do things like this, I typically want it to be at least over 34 to 44 points in range, okay? And at least there to be somewhat of like time left in the day. So like this being around 1 o'clock, I figure there's still some decent time. And also when I was looking at this too, I like the 6-hour bear flag, and this was only on its third bar, and this runs until end of session today, which makes this what? And I said it earlier this afternoon. What does this make this? And if you want to be exact or precise, you could do it right off the point in time that they stalled overnight. So overnight tonight, they had stalled right around here, right? And right around here. Do you see this? If we want to be exact, okay, 6568. These stalls in here. Okay. That's close to like 1 in the morning this morning. And also close to around 2:25 in the morning. So maybe like a what time was that exactly? 1:14, 1:15, 1:16. There's 360 minutes in 6 hours, right? So I could technically assume that the duration would be probably the extension between here and here. So like an easier way obviously is just to manually calculate it, but this, and the crazy thing is I would bet like even the ranges here sometimes could be the applicable ranges that they give when they extend or expand. So that's like roughly close to like 21 to 22 points. From the time ratio here, yeah, it's about 75 to 76 minutes. So 360 plus 75, basically like 435. Okay, 430, 400, do you see what I'm saying? So we could start looking at those. Maybe those have some better timing structures, okay, for kind of like close to here. And the reason I'm saying this, you guys, is because I want to time the exact moment that they could hold, okay? So 345 would be linked to like those overnight highs. Does that make sense? Let's see. What else would be linked to those overnight highs? 348. Okay. When they really started to turn things around, but you can see that a lot of these still make it durational, but there's a tiny, 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 tiny odd that they could try holding around this period here. Okay. What kind of pressure does that mean for 354? And this is why they're trying to hold the line here. Okay, it's not just based off price. This is a time-based theory here too. What are they trying to do here? And we don't always have flips at 354. They're usually 355, right at 354. So the fact that the flip is at 354, that makes 353 the final time here. Okay, what do they have to try doing at this point in time here ahead of 354 to make sure that those lows are in? We're timing the lows here. On a wider basis, it's durational till end of session. On an extremely calculated basis, it could occur around 353, 354, 348. This window here. This is kind of the cutoff. And the reason that that's the cutoff is because that's linked with that stall at 1:16 this morning, okay? $116. And then that 118 turnaround. Look at that. 437. So what do you guys think? I feel like that was a pretty good stick. I know that there's still obviously a lot of risk, but I think it is pretty mitigated though. What were those secondary periods? They could really try pushing that back over 64.20s into the close here, guys. 6, 5, 224, 225 this morning. 224. I just want to see if there's any correlation to end of session today. Some of these are after the bells. I wouldn't be surprised if they announce something after the close, which they've been doing a lot of lately. 252. Yeah, there it is right there. Look at it. These are the lower highs, you guys. Exactly at 353. That's insane. This is directly correlated to those morning lower highs at like 225. Okay. 505. What would this be? This is probably into the close. And 253. Yeah, this is a really nice time frame. So this is directly linked with these lower highs in here. So yeah, I feel like those lows are in. And they could definitely try getting this back. 67.22 to 28 is probably my max for the real-time session for like the 3:59 to 4 p.m. stick. If they take it any higher than that, I'd be pretty surprised. With 32 being the top of the zone. What do you guys think? Quickly before the final 2 minutes here. Did anyone flip long off the 348 to 351 period? I only had 2 short contracts left, so I covered those. I didn't do the long. But the timing aspect of this is pretty interesting. Callum, I don't mentor in Discord in that way anymore. I have my Substack though. The streams and everything else though are just complimentary, but if you want to read the weekly reports and such to have access, I guess, to Discord, then that's through Substack. But I don't always go over too much timing aspects of this, but this is a really important session today to try triggering those exact ranges. And you know what? It makes sense that they would try holding that area there, because that area there, like we said, is directly linked back with like this here off the highs. Remember how we said if we measure that, it links it back to that 60, whatever that spot is. Where's that spot? Here. off open. It links us right back to here, basically where they stalled, like into the zone range. Off 6.46668, it's kind of close to this range in here. Off 6.471, our core ratios. Do you see how they're linked? Like, these ratios have to be linked to our actual spots, okay? So do you see that? So the timing of this is linked to this point here, okay? Pay attention. Our actual area of support that is on the report is 6.47168, okay? So if we measure that exact range with this ratio in terms of time and price, that's linked back to here, and we measure it off to today's opening range, it should link it back to roughly around where they stalled, which is in this area here. That's pretty insane in terms of like correlation of time and price. If we do it off the actual areas of highs and lows, then it probably has some more, it's probably more closely linked to like 6.54851. Off of the actual open closer highs, it's linked back to the zone at like 65.90 or 88. I did turn on the bot too to record notes, so at least that way we can take down some notes. There were some odds for this after the bell at like 422, 429, so I wonder if they're going to announce anything after the bell, but lows for real time being in at this point in time made a lot of sense. Where'd they end up stalling this? Oh, they couldn't break that 64.20. 64.1925. That's a bearish stall beneath 64.20. We'll see where they end up taking it to. We did say though that they had higher odds of probably keeping this in that neutral zone based on where they opened the week. Do you guys remember how we just looked at that? This area here. So this that I mentioned earlier. So I'm not surprised that they basically left it there. Okay. In here. But 64.20s would have really helped reduce the risk. What did you guys vote for the lows? I didn't see the poll results. Twitch poll majority voted for 6398, 6405. Good job, you guys. You guys nailed that. And then the remainder voted for 6388, 6391. That was specific to real time. I wouldn't be surprised if they did push a bit lower for like the after hours session, maybe like around, like there's a bit of a buffer, but I think for me what sold me was the timing in terms of overnight highs, especially around these price points here, and specifically because we open at 65.10. So usually when you start the week neutral, they lean to end it neutral too, so it kind of goes back to going back to a similar zone. So we opened in this kind of zone in the beginning of the week, which typically takes you back to that same sort of area to close the week off. Okay, everyone, I'm going to sign off for the weekend. Thanks for watching. Hopefully you guys found this helpful. I'll have the report out on Sunday. Do we have a shorter week next week because of Easter? I forgot to look at that, but I almost forgot that it's already like end of March, but I'm pretty sure the market is closed on the 3rd. Is it not? Yes, it is. It is. The market is closed on the 3rd, you guys. Okay, that kind of changes things for us then a little bit, since we have our 3rd flip. That would put even more pressure then for the 2nd, because that would be the final day that week, because the market's closed on the 3rd. So good thing to note before the long or the short week ahead, I guess. Not really a long weekend. Next week would be the long weekend. All right. I will catch you guys on Sunday.